Welcome to Trade the Trend, a weekly video about where the stock market is heading. This video is going to focus on the SP 500. I'm also going to have a look at Bitcoin, so make sure you stick around for that. As always, this is general commentary, it doesn't take your personal situation into account. And just one video this week, I picked up a bit of a bug, so I'm not operating at full capacity. So yeah, we'll just wrap it all up in one go this time. So, okay, let's jump over to our first chart. So S&P 500 up on the screen, and yeah, look, an interesting week. Last week, you remember I was talking about the potential for some sort of a consolidation to develop, and much of the reason around that was that the price was just getting a bit stretched above these moving averages, and some sort of pause seemed like it was becoming due. And I think that's potentially what we're starting to see now, that we're starting to enter some sort of a consolidation period to work off this rally we've seen from around late May. And I think the odds favour that could continue to unfold over over at least the near term. And what is interesting though, every time the market has had some sort of a pullback, just think back to the last few months, whenever there's been a pullback, there's been quickly people coming in with calls, okay, that's it, the rally's over, the top's in, we're heading lower again, we're heading for some big decline. Again, I'm already seeing that around the traps with this latest pullback. People are saying, oh look, market's going to tank, big declines are coming. I don't know. I just don't. I don't think there's enough, or I don't think there's anything really at the moment to suggest that that's the case. I think the most likely scenario is that this is simply a pullback, a consolidation of the recent advance. And so let's just draw in some Fibonacci levels on this. So I'm going to use this low from late May. We'll use the recent high, and when you put the fibs in, you get this Fibonacci retracement band around 4,300, give or take a bit on either side. And so from that perspective, you can see there's still plenty of room for the market to pull back and be within the bounds of a normal sort of pullback or consolidation. And that would also give these moving averages a bit of a chance to catch up with the price action. Another thing I want to have a quick look at is just put an advanced decline line on the S&P 500, and there's really nothing untoward here. The advanced decline line recently made a new high. There's no negative divergence, nothing pointing to impending trouble. When you look back at the high from the high in early 2022, there was divergence appearing on the advanced decline line. Advanced decline line was not making a new high, whereas the market was. That was a warning sign. Don't have that sort of sign here. So I think that the balance of probability is that this is most likely a consolidation until, of course, the price action tells us otherwise. I think the play here remains long. I'm still long this market. I'm holding my positions. I think the trend remains to the upside, and until the price action tells us otherwise, I think that remains the play. Jumping across, having a look at the S&P 500 on an equal weighted basis, and well, it's still very much range bound. But the positive of this is that the price is currently above the moving averages. We've got the 50 and the 100-day moving averages. They're starting to turn high. They're starting to cross again. It's happened several times within this range, moving averages crossing and then reversing again. It's that's the nature of trading ranges. You get some whipsaw on the averages, but at the moment we're above the averages. We're in the top half of the range. It's constructive while still being range bound. I think this divergence that we have, whereas we've got the S&P 500 making new highs, but the equal weight hasn't made a new high. Look, I think that's still reason for caution, there's still reasons for caution in this market, but I don't think this is a reason in itself to be bearish. Ultimately, we need to see the equal weight SP 500 break to new highs, and that would give confirmation to the price action that we've been seeing in the SP 500. And as I've been saying for weeks and weeks now, healthy bull markets really do require broad-based participation. I think that's been improving in recent weeks. I think there's been more breadth coming into the market, but we do want to see confirmation coming in with the equal weight breaking to new highs. Now, I'm going to have a look at the Nasdaq in a moment, but first of all, if you're getting some value, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It lets YouTube know you're watching, and then YouTube will show other people. And also hit that subscribe button if you haven't already done so. Helps me a lot, so please do that. Now, Nasdaq time. Well, last week I said that I thought the Nasdaq was getting pretty close to some sort of a pause, and we are getting a little bit of a pause here at the moment. I also noted that I didn't think it was an asymmetric entry point after having such a strong run, getting stretched above the averages. It wasn't that asymmetric time to go and establish new positions, and I think that remains very much the case at the moment. Even with this pullback in the last couple of days, still stretched above these moving averages, and I think this is a sign this consolidation is underway. Just like I was saying with the S&P 500, if we put on some Fibonacci retracements, let's use this low here. This is the last notable low, I think, from late April. So stiff into the S&P 500. But when we put that on, you can see where a potential pullback could come to. So this isn't a target by any stretch. It just gives an idea of what a normal pullback could look like if the market was to consolidate this entire rally from April. Maybe that's not what it's going to do, but just gives an idea. And again, it gives these moving averages a chance to catch up, and then we can get some sort of potentially another base established at a higher level from which further gains could come in the weeks or maybe months ahead. So yeah, look, keep an eye on these fibs and these moving averages, I think, over the next couple of weeks. Other thing to keep an eye on is the US dollar index. Just interesting watching this over the last couple of weeks. Looks like it's losing some downward momentum just in recent times, and that's losing momentum just above support. So we've got support, a shorter term support coming through on the index at around 101, and then you got this longer term support which comes in just beneath there. So just quickly putting this on, I put it on a weekly chart, you'll get a better idea of this longer term support. You can see this is quite a key level that the market's come back to. It's consolidating above there. So what's going to happen here? Are we going to get a rally off this support? Now, what's interesting there, if we get a rally in the dollar from around current levels, maybe that puts some pressure on stocks. Maybe that's to do. Last week I talked about the 10-year bond yield, how it looked like maybe it was on its some levels to watch. Maybe it's getting close to breaking higher. Could coincide with a rally in the dollar. Maybe it's another reason for a pause in the stock. So a few things to keep an eye on and keep in mind around how you're approaching your positioning. And one last thing I just want to have a quick look at, Bitcoin. Just an interesting market I've been looking at through the week. I don't normally talk about Bitcoin, but it's look, this is one of the great things about technical analysis. It can take you to all sorts of interesting markets. You don't have to be an expert in any of them, but if you understand your price action, you can look at a whole range of things. So what's interesting with Bitcoin is, well, we've had the big decline during 2002. You can see this green line beneath. We've got a classic rounding basing formation in place. Just walking you through a couple of other factors. Last year in November, Bitcoin broke to the downside, broke below some support, didn't stay below there for too long. So when a market breaks below support and then fairly quickly finds itself back up above support, it tells you there's everyone who wanted to sold had pretty much sold, so there's no follow through selling. And since then, we've got some work. We moved to the top of the range, broke higher in March, and since then we've been slowly consolidating in this this shallow downward trend channel until last week, where we got an upward break. So an interesting market to watch for anyone who likes looking at price action. It does have that asymmetric element to it, where the relative downside seems reasonably contained at current levels, but then the upside is potentially quite robust. So it's just a market which I don't have a position in, but it's one I like to. I'll continue to watch just from the interest of a price action perspective. So hopefully that's been interesting. I'll leave it there with my voice a little bit croaky this week. Thank you for joining me. Hopefully that's been of interest, and look forward to coming back and talking to you next week. Until then, bye for now.